Hello, traders. My name is Jacey with Empire Algorithmic Trading, and this is VWAP Vision Stock Talk, where every day my friend Matt and I take a look at the stock market and analyze it using just the VWAP. So let's get ready and talk some stock. All right, Matt. Well, we're no longer stalking any talks, but we are going to talk some stocks. So
Let's
let's
do
just
it.
take a look here. First off, hey, man, how was your day? Sorry to be so rude. Didn't mean to cut you off there.
You're fine. Tuesday was great for me. We got beautiful weather and everything's looking on the up and up here. So I can't complain. How about yourself?
It was a very nice day. We too have nice warm weather down here, so not complaining at all. It was very busy. I was super busy today, so I really didn't have a lot of time to follow the market intraday. I did see it was down. I did see the Nasdaq was up briefly a little bit, then it was down a little bit again. So when I came home, I was kind of expecting to see a little bit more of the same, particularly underneath, right, in the leading stocks. We've been like yesterday, we had over 100 of the 200 stocks on our watch list trade down more than 4%, right? It was just a wholesale slaughter. So I was kind of expecting to see something similar, nothing to that extent. However, I was pleasantly surprised to see some pretty significant changes, pretty significant moves underneath. That kind of tell me a little bit underneath, we're starting to see some buying interest. Some stocks, we're not going to go through a whole lot of them because they're all just beat to crap and they're way down. So we've got a lot of work to do. But when you combine what we've been seeing in the market today, now granted, the market hasn't been able to put a rally together more than one day. So
Right.
that's why we aren't getting in on any of this. This is just hope against hope, but we're just watching the market every day and looking for signs of life, right? And even though the major indexes were selling off hard, there was a ton of life underneath. So that's exactly the opposite of what we saw when the indexes were hitting highs, and we were seeing not a lot of breakouts, but most of those breakouts failing. We're starting to see a lot of stocks near potential support levels, starting to see some interest. So that bodes well for the future. Whether or not it's just short covering, because a lot of these stocks are just crushed really hard, is a legitimate concern, which is why we wait for trends to be established. So it could be any reasons, like we were talking about off camera. The Canadian premier for Ontario, you said, was calling off a tariff, so maybe that's why some of the energy stocks were rallying. Any number of reasons. It's a very volatile, very news-driven market right now, and that's never easy. That's never fun. So which is why we're out of it at this point. So yeah. Let's just take a quick look. So the S&P 500 was down a little bit over 0.7% today. But those two white lines on the chart there, right in between two VWAPs, right? This VWAP coincides with this high here, and then this lower VWAP coincides with down here. So there's a lot of potential support right there, and to see the market kind of find some indecision here is a good sign. So if anything, this initial wave might be done. Again, that's what we were thinking last Friday, and then that Monday happened. So you just never
Another
know
Monday.
with the market, but that's just kind of what we're seeing. Same thing with the Nasdaq Composite, a very very exhausted market right there. The
And
the
hey,
Nasdaq
Jace,
is
real
hurting.
quick before we
Yeah,
move on, can you go right back to that S&P 500 there?
yeah.
We did start putting this platform out there for our podcast listeners who want to. So can you just toss some of those numbers there about those VWAPs that we're looking for
Oh,
some support?
yeah. Thank you. Sorry about that, Matt. Yeah, so the upper VWAP is at around 58.50. It's a little over that. Currently, the S&P is at 55.72. So what we're looking for is for the VWAP, which is about 55.20, to hold, right? And today's low was down at 55.28. So it's holding that right now, and that's where we would like to see this hold. The reason why is because this VWAP had provided support way back here. Let's see, in April down at 49.53, and then once again back here in August at 51.19. So it's already proven to be a support level that the market then launched into new highs. So that's why I'm saying this one is a pretty good one. The long-term trend, the reason why I think we're in a significant correction, if not a bear market, is because the lows from November at 57.23 just didn't hold. So we've had a trend break. We've had two back-to-back attempted breakouts fail, and then we have a minor low set before a high completely break down. So that's 3 steps to a potential change of direction. And usually 2 out of 3 means you're in trouble. When you get 3 out of 3, it's not looking so good. So, and we've seen that play out exactly
Right.
over the past couple of weeks. So now's the time to start planning. Now's the time to start looking for where the buyers are coming in, not to get in with it, because it's like we said yesterday, it's like trying to catch a knife. But we want to see the buyers come in. So one, the sellers are starting to exhaust themselves, and two, some institutions are starting to eat up some of these shares. So that just presents a base, a foundation for the market to move forward from here. And then once it does, then it's got to clear our resistance levels. And once that does, then we're in the clear. We know we got a new uptrend. So right now, that's what we're looking for. We're not there yet, but we're getting close. So look for 55.20 to hold on the S&P 500. Down to the mid caps, same thing. It's in a clear downtrend. The VWAP for that one, we use the mid cap trust series fund because we don't have VWAPs for the mid cap 400, but the VWAP for that one's around 580, and the index right now is at 531. So it's got a little bit of work to do to get through that resistance. And then bonds are holding up quite well, which is exactly what we want to see. We don't want to see bonds sell off, particularly push interest rates up, because then that just, like we said, sparks of reeks of stagflation. So that's not what we want. But however, I do want to take a quick look at a couple of real quick stocks. We have Bloom Energy was up 10.5% today. It was an attempted breakout, the last green zone, and it got pushed down right away. However, its lows are holding, right? It set a low back in its consolidation of 1982, and then just the other day it hit a low of 2025, and now it's at 25. So it's already rallied up 25% off that's low. So that's telling you there's some buyers there. It was acting today, maybe off of the news from out of Canada. However, what I'm impressed by is it's holding on to that big gap. It had a big gap back in November where it went from 13 to 21, 22 in one day, and it's holding that. All
Okay.
the other stocks that we've been seeing over the past couple of months that have been trying to do that are completely cratering. So there's some
Yep.
significant strength there, which is what we're looking for, because the stocks that are showing strength right now, when the market does rally and it does snap back, these are going to be our leaders. So that's why we watch them. Same thing with Atour Lifestyle. It's holding up extremely well, all things considered. It broke out, rallied up from 27 up to 33. It did hit into a wall, sold off with the market, flashed our sell signal at about 29. It's currently trading about 30, but it's been finding a floor at the previous consolidation level. So again, it's the same theory, right? The stocks that are showing the strength right now, the relative strength, are to be the ones that are going to lead us higher. And that's a big if the market continues to move forward from here. If the market doesn't, then these things are probably going to continue looking down, and anyone saying, hey, these are showing strength is going to look like a fool. So
Right.
it's all relative to what happens next. A bad market's going to take everything down with it. A correction, the ones holding up the best in a correction when the market turns around will lead that market higher. So those are two different ways to look at it. And right now, I'm hoping for just a correction. All signs are a correction, but you just never know until you're in it. So lastly, we've got Palomar. It's been a red zone breakout, but it just hit a new high, I believe. Let's zoom
Holding
out a
there.
little
Look at
bit
that.
more. Yeah, I mean a
Yeah.
new high, 131.21. And so that's the epitome of strength, right? Stocks hitting
Yep.
new highs, everything else is crashing around it. So that
Yep.
is where we're at, Matt. A different, a day that's hard to read, right? Because usually
Yep.
everything works in concert. It's those divergent days where you're like, okay, so what's going on here? And you always want to look at the leading stocks. And what we do is we focus on growth stocks. We focus on the market, on the stocks that have the best price history, the stocks that their earnings per share growth is outperforming the rest. And so by definition, we watch the leaders. And so when we see significant price moves. Like I said, we had 32 stocks on our watch list of 200 trade up over 4% today when all four indexes were down. That's telling you something's going on. So there might be a little bit of life and we might see a little bit of a bounce. Whether or not it lasts is the $1 million question. So it was kind of an exciting session for some small little losses on the major averages.
Well, and I do want to bring up real quick because one of the things that we do with our, I guess you'd say, strategy, how we look at the markets are we don't pay a lot of attention to the daily news cycle of exactly what's happening where and how. One of the things that we can talk about, and again, we don't want to hitch our anchor to this, but we talk about there was a strong JOLTS data that came out for the labor market showing that there were a lot of jobs added and more than they were expected right away this morning. And then, like you said, Doug Ford, the premier for Ontario, basically said we're going to suspend the tariffs that we talked about with cutting off energy to the US from Canada. Well, we then saw a run on all of these energy stocks. But that again is people being speculative, reacting to news cycles. It's not a permanent reversal. It doesn't show a lot of strength. It just shows people panic buying. And in a down market, in a bear market, people have that fear, and then all of a sudden you start to see some FOMO, and people will throw their money at it. That's a really easy way to potentially lose a lot of money really fast.
Yes.
And so I just want to point out again where there was a lot of positivity and a lot of stocks that took a pretty significant upturn. You have to look at it in the historical value and not just a day to day, because that is something where, again, if you're throwing all your money because all of a sudden you see this reversal and you think that's the bottom, that's not necessarily the case. We hope we start seeing some things turn, but hope is a real quick way to lose a lot of money too.
Yeah, hope and a prayer, right? There's nothing
Yeah,
worse than hoping you could get out.
yeah,
And the reason why too is I prefer to let like we said, let the dust settle. Let's let the buyers and the sellers figure it out. Let's get the buyers in control. And the reason why that is because then the odds are in our favor and the probabilities are in our favor. And I'm willing to give up a little bit of a return, sometimes even a significant return, just simply so the odds are in my favor because it's a risky game. It's a difficult market. Even in good markets, the stock market is hard, right? And so you never know. And so it's always best to wait, let things settle out, particularly on the long side. Short side's completely different. Short side, it's a different monster. But I like to focus on the long term. I like to focus on the long side, I should say. So, it's exciting to watch, particularly when you're seeing these fights and these potential signs of, hey, there might be some exhaustion sell. The sellers might be exhausted here. Maybe buyers are coming in. So, what we want is we want that trend established, and then we want to get in on that. So, let's let the big institutions, the big deep pockets, absorb all that risk, create the floor for us, and then start moving stocks higher. And then we just
yeah.
let them do all the work for us, and then we just get on board. So it works quite well so far. We've been doing all right. We had about 15% of our breakouts in the last green zone move up double digits or more, and the S&P 500 went up only 1.5%. So I'm excited for when the market actually broadens out and we get participation across the board, not just in some select fast growing big cap stocks, right? So, then we're going to start seeing some significant returns. So right now we're just waiting. We're not even close to the potential what we can see. And it's just a matter of time until that happens. So it's important to be patient because you don't want to just jump, like you said, Matt, you don't want to just jump in at the first sign of life. You could you could lose a lot of money because it could just turn against you. Then you're trapped unless you have a very solid plan. Unless hey, I'm gonna cut it at today's short, and I'm willing to take that 30% probability. I'm gonna cut it at today's low. Then that's your risk tolerance. Then by all means, use today's low as your stop point. But I'm not there. We didn't create the algorithm to do that, and so we're
Nope.
just gonna wait and let everybody else take that risk for us.
Yeah, you guys lose your money. We'll take it all in the next rally.
That's right. That's right. Well, it's fun. There's a billions of people watching it and all different opinions, and it's just all price and volume, and so sometimes it's good to not know what's going on in the market, because then it'll cloud your judgment. You could go, well, it's just this reason, and if it's just this, you can justify holding, right? You can justify buying. And so it's best to just let the market be your guide. Outsource those decisions. There's so many people watching it. There's people that get paid a lot of money to do research this stuff a lot better than we can, right? And so let's let them do the work for us, and let's just learn what, because they can't hide their footprints, right? When they're buying into it, it's obvious. So that's why we use the price and volume, and the best indicator of that is the VWAP, because it includes price and volume all into one spot, and then you throw time involved in that, and it tells you exactly where the market is at. So there's no better indicator, in my opinion, and it allows you, it gives you clarity. It's the VWAP Vision, hence the title of our show. All right,
Right.
Matt. Well, that's all I got for today. I'm getting a little hungry. I'm ready for a little dinner. How
My
about yourself?
man. All right. I'm the same way, but before we go, I do want to say for those who are listening on Spotify, you can catch our video blog on YouTube every day or on Patreon. If you want access to our daily arrow signals where we talk about stocks that are breaking out or stocks that are looking like they're about to lose big, make sure you subscribe at our Patreon. That's patreon.com/Empire Algorithmic Trading. Otherwise, follow us on all social media: Facebook, Instagram, X, formerly known as Twitter, Blue Sky. And for more information, please check out Vwapvision.com. As always, thank you for tuning in, signing up, being with us today. And that being said, JC, happy trading.
Happy trading, my friend. We'll talk to you later.